What's going on YouTube? Craig here with the Never Trade, and today we're going to be exploring with you the world of cryptocurrency trading. I'm going to be covering essentially everything I feel you need to know for my 6 years of full-time trading and investing experience. So by the time you get to the end of the video and make it through the entire thing, you'll know exactly how to move forward navigating the cryptocurrency market safely and successfully. You're going to learn things like how to trade cryptocurrency from start to finish, fundamental crypto knowledge, which exchanges to use for what functions, how to do technical and fundamental analysis, and just a practical step-by-step guide on how to trade and invest in cryptocurrency. So grab a notebook, get comfortable, and let's get into the training. So obviously we're in cryptocurrency to make money. So the goal is to get into cryptocurrencies, have them appreciate, and then be able to sell them for a profit. That's pretty simple. But a ton of people that are doing trading and investing in crypto are just doing it off of feelings, and essentially they're doing it randomly, which almost always leads to huge mistakes, losing money, and not have it be a consistent way to actually make money in the crypto markets. When you're actually trading and investing properly, you're always using a regimented system that you know statistically works because you've tested it over enough data to know out of 100 trades you're going to be successful. And you also are always quantifying your risk and knowing exactly where to get in and where to get out, whether it's for profit or whether it's for loss. And a lot of the fundamental things that make sense in normal life and make people successful in normal life don't translate over into the financial markets, which is a lot of times why the smartest, most successful people normally actually make the worst investors. So maybe this doesn't make perfect sense to you, but as we get through this entire video, you're probably going to have that aha moment where it starts to all come together, and you're going to start to see what makes these practices different than what most people do. These are sort of the keys to actually doing this the proper ways. So let's talk about what cryptocurrency actually is. It's a way of digitally tracking and storing information that can be largely decentralized and spread out amongst an entire network, which makes it a lot safer. And all of this data is secured by cryptography, which makes it nearly impossible to counterfeit or double spend. And usually one of the most defining features about cryptocurrency is it's not generally issued by a central authority like we were just saying. So it's essentially immune to government interference or manipulation. And blockchain technology is a database that collects information that is then stored electronically on a computer or a system in table format, which allows for easier searching and filters for specific information. So all of the transactions that go on a blockchain create code, and then all of that code gets put together and is then organized into blocks. And then they're protected with cryptography, which ensures that the previous transaction within the network cannot either be forgotten or destroyed. Blockchain technology allows a digital currency to maintain structured without relying on a centralized authority, which is sort of like why cryptocurrency is so cool right now. So there are four main types of cryptocurrencies. Okay, there's a store of value cryptocurrency like Bitcoin. Okay, there's purely digital currency, so it's essentially just like a money system. There are utility tokens that perform functions inside networks, and then there's security tokens. We all know that cryptocurrencies are digital currencies that use cryptography to be able to store and track data. So I want to get into some metrics that we look at to look at cryptocurrencies from fundamental benchmarks. Okay, so first thing I'm going to talk about is market capitalization, also known as market cap. Okay, the term market capitalization or market cap refers to the metric that measures the relative size of a cryptocurrency. It's calculated by multiplying the current market price of the particular token with the total amount of tokens in circulation. Okay, there's a total supply and then there's a total amount in circulation. The supply is how many coins there are in existence, and then the circulating supply is how many tokens are actually available to the public. So if I make a cryptocurrency that has 100 tokens, but I only want 50% of the tokens right now at launch to be accessible to the public, that means that we have 50 tokens in circulating supply and 100 tokens as a total supply. So therefore, if the price of the individual token increases, the market cap will also increase, assuming the number of coins in circulation does not change. And that's a very important thing that we're going to get into a little bit more later. Okay, so how you calculate market cap is price per coin times total number of coins in circulation, and that's going to give you your market capitalization. Another important thing to keep in mind is the market cap may offer some insight about the size and performance of the company or cryptocurrency. It's important to understand that this is not the amount of money inflow, okay? So it does not represent how much money is actually in the market. This is a common misconception because the calculation of market cap is directly dependent on price, but in fact, a relatively small variation in price may affect the market cap significantly. So for example, if we take a cryptocurrency that is $10 and it increases in price to $15, which would cause a market capitalization to go from 500 million to 750 million, this doesn't mean that there is an inflow of 250 million into the market. The amount of money needed to cause a price increase like that will largely depend on volume and liquidity, and this is something that we're going to get into a little bit later as well. Okay, one of the biggest emerging spaces in cryptocurrency, especially as of recently, is DeFi, or decentralized finance. Okay, this is the use of smart contracts and blockchain to be able to do banking functions that normally take a ton of work from people and a ton of time to actually process, that is now using automatic contracts that are executed based on if-then conditions. And this is really expediting a lot of the processes that used to take a ton of time in traditional banking. So next, I want to take a look at volume and average volume. Volume is one of the most important indicators when it comes to evaluating cryptocurrency price action, or the way the price actually moves on a chart. Okay, so volume is the amount the coin has been traded in a certain period of time. For example, roughly $3.5 billion worth of Bitcoin has changed hands in the last day. So volume is useful in gauging the amount of market participation that is going on over a certain period of time. So more volume means more people are trading. More people trading means that there are more transactions and more cryptocurrency changing hands between people. And oftentimes we can use charts that will indicate this as a visual representation. So we can see right here, usually when there's aggressive moves in price action, you can see when Bitcoin took some significant dips down here, we saw pretty significant increases in volume as well. And so we can start to use that as a tool to see where a lot of people will be taking action in certain places. And this can help us make trading decisions down the line. And the color of the bar graph on this indicator is going to show you which side had more transactions. So if over time there were more buyers versus sellers, it's going to be blue, or whatever color you set it to be. If there is more sellers over that period of time, they will be orange or red, or whatever color you set it to. But you can differentiate between those two values and see whether or not there was more buying or selling over that time period. And sort of tying into the volume conversation is something called liquidity. So liquidity is going to be the ability for coins to be easily converted into cash or into other coins. Okay, liquidity is important for all tradable assets, including cryptocurrencies. Low liquidity can lead to volatility and can cause for pretty sporadic, weird looking price action. So I want to give a quick example to show liquidity. So as an example, imagine you want to sell something at a farmer's market. Okay, so we have two separate farmer's markets. Farmer's market 1 has 10 people all looking to buy corn at different prices. Farmer's market 2 has 1,000 people all looking to buy corn at all different prices. Okay, so if you want to sell corn for $2 in farmer's market 1, but there's only 10 people to sell to, you might not be able to sell it for the exact price you're looking to sell it for instantly. But if you want to sell your corn for $2 at farmer's market 2, there are 1,000 people to sell to. So the chances of you being able to sell your corn, sell it for the price you want, and sell it quickly is a lot bigger, because there's a lot more volume in people trying to buy and sell corn. And that sort of explains liquidity. You need to be able to have people ready to buy and sell at all different prices if you're looking to exit and enter the market. Okay, and this leads us to the bid and ask, or buyers and sellers. Oftentimes you'll see when you're trading, there's a buy level and a sell level. Okay, bid and ask is very important, because if there's not a lot of liquidity, the spread is going to be larger, and that's oftentimes going to mean that it's going to be harder for you to get in and out of the markets quickly and at the price that you are going to want. So there are always two sides of each transaction, a buyer and a seller. There has to be someone willing to buy from a seller and a seller willing to sell in order for the transaction to happen. So the difference between the lowest seller offer and the highest buy offer is called the spread. So if a buyer is willing to buy a cryptocurrency at $1.90 and the seller is willing to sell it at $2, there is a 10-cent spread between buyers and sellers. So if you want to immediately buy this token, you can buy it from the seller at $2, but the next willing person to buy it from you is going to come in at $1.90, meaning that you're basically going to immediately lose 10 cents times however many tokens that you've purchased if you want to then go and immediately sell your position. So the bid, or the buyers, is the price that people are trying to buy at right now. And the ask is where you can buy in right now from the sellers. This is the price that people are willing to sell sell to you at right now. All right, so now I want to move on to crypto technical analysis and understand how to look at cryptocurrency on a more technical level. So I want to show you some of the technical elements, and then I want to apply it onto a chart so we can start looking at cryptocurrencies and sort of understanding exactly what we're doing. Okay, so first I want to go over candlesticks and how to actually read them. So you can see right here we have two different colored candlesticks. So a green candle means that the close price right here was higher than where the price opens. So if the price opens right at this line, closes at this line, these two wicks are showing you the highs and lows for that period of time. So green means that over this period of time, whatever amount of time this candlestick is representing, the price has increased. Same thing with the red candle, but in the opposite direction, meaning that the price opened here, but then it closed lower down here. This is still showing you the low of the total time period. This is still showing you the high point overall. So when you start to see that on charts, you're going to understand that over time, the price is either increased or decreased, and you'll be able to see the high and low of where the price actually moved. Okay. Next thing I want to talk about are trends. So trends are essentially showing a group of price action and which direction it has generally moved over that time. And you can tell uptrends between downtrends from seeing whether or not the lows are getting higher and the highs are getting higher, or if the highs are getting lower and the lows are also getting lower. So in this example right here, the highs are consistently making higher highs and lows are consistently making lower lows, which is indicating an uptrend. And then same thing for the downtrend, these highs are consistently getting lower and the lows are consistently getting lower. It means overall the price action is generally moving down. Okay, with that comes support and resistance levels. So anytime you hear support or resistance, you have to think support is when the price action is being held up by a certain amount of buyers, and resistance is when there's a certain amount of sell pressure that is holding the price action down. As the demand increases for a cryptocurrency, the price is going to move up until eventually the demand can no longer reach the amount of sell pressure there is. And then once the sellers start to win, the price action will decrease until we get another level of support. If we get another level of support lower than the initial point, that's going to indicate the beginning of a downtrend. And if we see this support level, say a little bit higher, that's going to largely indicate a higher low, which is then going to indicate an uptrend. So we can start to look at support and resistance as support holding the price up. Resistance is when the price is being held down. Okay, a trend break, we can see right here, if this is a trend on Bitcoin where we have these highs and lows along these levels, if this price action then breaks down and makes a new low, if we get the price to move down low enough, this can reverse the trend and can be a trend break and is oftentimes called a trend reversal. There are a few patterns to just be able to recognize when you're looking at how price tends to move. So the first one is a symmetrical triangle. This is when we have the angle being roughly the same on both sides. The price action comes and bounces between these two levels, coming to an intersection where it has to then make a decision whether it's going to continue breaking up high or it's going to break down. We can see an example of this in real time. So we see an increase in price, resistance off of this level breaks down, continues to sort of wind between these 2 points, and then eventually, whether or not the buyers or sellers win, the buyers win, it'll break up through this resistance level here. And if the sellers win, it will break down through the support level here and have a continuation in that direction. Okay, an ascending triangular breakout is when we have this neckline resistance level right here, and we have an ascending support level right here where the price action is coming and continually moving higher until it reaches this sort of flat level of resistance or sellers. And if the price action breaks up through that point, it can be oftentimes an indication that the buying pressure is so significant, there could be a continuation in the price action past that point. Okay, same thing in the opposite direction. A descending triangle is when we have this neckline support level. We have descending highs funneling sort of into this point, and then if the sell pressure is more than the buy pressure or the support, the price action will break down, and it's going to require usually a certain amount of sell volume, which can indicate severe selling pressure. All right, so the next concept that I want to talk about are different order types that we can be using on exchanges to be able to enter cryptocurrencies and make sure that we're using the right ones in the right scenarios. Okay, so the first one that I'm going to talk about is a limit order. And basically what a limit order is saying to the market is it's saying I only want to get into a cryptocurrency at a specific price. Okay, so you'd use limits when the spread is moving around like crazy and when timing an entry is really, really important so that you don't end up losing a ton of money. So if you're trying to take a trade on 10 cents and the spread is 2 cents, that's 20% of your total profit that you're looking to make, which means that you can't just sort of enter in wherever you want. So you want to set a limit order to be able to get in at a very, very specific price. Okay, the next order that we're going to talk about is the opposite essentially of a limit order, and it's a market order. So when you submit a market order, you're telling the exchange to take any available next price to get you into the position and automatically fill you at that. So market orders aren't a good idea when there's low liquidity and there isn't a lot of buyers and sellers on both sides of the transaction. But it can be very fast and easy to get in and out if, let's say, you're trading Bitcoin and there's hundreds of thousands of orders all right basically at the buy and sell level currently, and where the spread is going to be so negligent that it doesn't even matter. You can just market in and market out. And because the spread is so tight and there's so many people looking to buy and sell, it's not going to be an issue. A stop order is essentially a market order, which is triggered at a certain price to get you out of a position. Okay, so let's say I buy cryptocurrency at $2 with 100 tokens, and I want to say to the exchange at $1.90, if the price goes to $1.90, I want you to sell my position as a market order. You'd set a stop loss and you'd hit sell. Okay, and then a range order is going to be when you're setting a stop loss and a profit target simultaneously. A lot of exchanges have either range orders or you're setting a profit target and also a stop order as well. Profit target is going to almost always be a limit order. All right, next I want to talk about simple moving averages and exponential moving averages. So a simple moving average is an arithmetic moving average calculated by adding the recent close prices and then dividing by the number of time periods in the calculated average. So if we have all of the close prices added, so like let's say for example, this close price right here is at 20, this close price is at 21, and we use that continued through this whole entire thing. If we add all of those and then divide by the number of candles that we have here, this is going to plot a line over that, which is going to show us roughly distributed over the entire course of price action where on average the price action is moving. And this can be helpful to establish overall trends and have it be evenly distributed through the entire move, whereas an exponential moving average is a weighted moving average that gives more weight or importance to the recent price data than just what a simple moving average would calculate. So the EMA responds more aggressively to the most recent price changes, and the formula for calculating EMA just involves using a multiplier that starts with the SMA. So as this price action develops, the most recent price action sort of towards the front of this moving average is going to change the value of the EMA more aggressively than the SMA. So let's say, for example, there's an outlier, whereas like we have this moving and then we have one candle that drops way lower down. This exponential moving average is going to have a lot more of a significant move down than what a simple moving average would be, because instead of calculating evenly all of the price action, it's taking the most recent price action and considering that to a much larger degree in the calculation. So it's more of a responsive average to the most recent price data. Okay, next I want to go over charting frequencies. So here, let's assume that each candle right here is representing 1 hour of price action. So let's say at 12 o'clock, from 12 to 1, this is showing us from 12 to 1 where the open, close, and then the high and low of the total price action has been. 1 hour candle, 1 hour worth of price movement is one candle. If we take this exact same candle and we were to click down to a 15-minute frequency, this one candle would then turn into 4 different candles worth of price action and so on down the line. So if I show you on a chart, this is a stock chart, but it doesn't matter because it's the same exact concept. This red block over here on a 5-minute frequency is showing you the same amount of data that is over here on this 1 hour chart, but it's just sort of more a zoomed in version, and those are called chart frequencies. One of the indicators that we use all the time on our internal cryptocurrency trading team is called MACD. So what MACD stands for is moving average convergent divergent, and it's a trend following momentum indicator that shows a relationship between two moving averages of a security's price. But basically, there is a more reactive and less reactive moving average. So when we see short-term changes of momentum over the long-term trajectory, it can show us indications that the price action is about to switch directions. So we see the MACD line cross over the trigger line, which is the red line right here. So the shorter-term EMA is crossing over the SMA, and this can indicate that there can be a massive change in direction. This is a reactive indicator, so we don't rely on it too much, but it's important to understand. So the last concept that I want to talk about on the sort of fundamental side before we go over and start looking at some charts is called the Fibonacci sequence or the Fibonacci ratio. And this is something that we really hone in on the premium side of InnovaTrade or our internal cryptocurrency trading team. So I don't want to give too much away because it would be unfair to them, but I do want to touch upon why we use it, because it's one of the most critical tools that we use when we're doing technical analysis, and it's going to allow us to be able to play trends really, really well. So the Fibonacci sequence is a mathematical series that develops with beginning 1 and then which begins with 1 and then 1, and the next number is formed by the sum of the two previous numbers. And this just continues on over and over. So we can see right here is a visual representation of the Fibonacci ratio. So we start with 0 and 1, sum of that is 1, sum of these two numbers is 3, some of these two numbers is 5, some of these two numbers is 8, and so on. Okay, the 61.8 level is found by dividing the current number by the previous number, and this will be the full retracement level of cryptocurrency moves. And all of this stuff is found in nature. So anytime we see the way plants grow or how seashells even grow, all use the Fibonacci ratio because it just ties into the way nature works, and it almost always translates over into the way people interact with the markets. And charting is essentially looking at the visual representation of mass human psychology in the actions that they take on the corresponding assets they're trading. Okay, and all of this stuff I'm not going to get quite into because it would be unfair, but I will show you sort of how it works. Okay, so if we go over here, we've already talked about our time frames. So I want to go over here and pull up a chart of Bitcoin on the 15-minute frequency and start talking about some of the concepts that we were just talking about. So patterns, trends, identifying supply and demand levels, looking at volume, and then also using MACD. So what you really want to start doing is looking at sort of these invisible levels where the price is bouncing off of, and looking at that as supply and demand imbalances and support and resistance levels. And you can start to quantify that by using trends. So if we're able to sort of look at, you know, a low right here and another low right here, this low over here is probably going to perfectly line up with these previous lows right here, because that's a level where the buyers continue to hold the price up. So if we just click and drag along these levels right here, we can then have this level touch perfectly, this level touch perfectly, and as a consequence, we are going to see support levels right here on Bitcoin. And we can see, just like we were talking about with our trend break, once the sell pressure becomes enough to break down through the support level. So once we got a breakdown through this zone, you can see there's a corresponding amount of sell pressure that had to come through. You can see there really wasn't that much sell pressure or buy pressure along this level right here. Okay, this was the 2-hour high in sell volume. And once we saw this break up through the average level right here, we saw a breakdown of this support level. Once the price action broke down through it, price came up on the underside of this previous support and turned into a resistance level. So the price action came up, bounced off this level, and continued moving down. So this is how you really want to start doing your analysis on cryptocurrency charts, and you can start evaluating areas where the price action is going to start changing directions and moving into the opposite direction. And this exact concept is how we're able to actually start to quantify where to enter trades, so that then we can keep our risk relatively small and be able to enter at the perfect times, so that we're able to actually turn a profit on these cryptocurrencies. And I can actually show you a really good example of exactly how we do this. Whereas on LPT, we took those lows, we took these highs over here, and we said, okay, we want to get in perfectly at this yellow line. We want to put our risk down to here with our reward all the way up to here. And you can see if we hit play, this is before we alerted this out in our premium section with our team, the price action came perfectly down to this level and then turned around, and it exploded up, and we were able to hit a crazy 5 to 6 risk reward trade, which means that we're making 5 times the amount of money that we're losing, which means that if we're risking $100, we're making $500, $600 on these trades just by being able to use technical analysis to be able to take trades like this. And it goes a lot deeper than just being able to do this, because you have to be able to understand risk reward and back testing. But these are things that we talk about on the premium side of our training. You can start to understand why it's important to actually know technical analysis and understand trading theory. And for those of you that don't know, the software that I'm using right here to chart is called TradingView. Okay, TradingView is essentially the gold standard of being able to chart cryptocurrencies and basically asset classes across the board. Okay, you can use this software for free, but if you want to be able to use all of the features on it, it's going to cost a fee per month, or you can pay annually to be able to do all this stuff. I'm not going to cover all of the features on here, but I'm going to go over roughly how to use TradingView so that you can get on here and probably have an idea of how to set everything up. So it's going to look something like this. Okay, so obviously you're going to want to sign in so that you can save all of your settings. And if it doesn't look like candlesticks, this is exactly how you change between, like a line graph, or, if you want the area filled in underneath it, that's what that's going to look like. So I always do candlesticks. If you want to change the visual color of these candlesticks, you can right click over here and then go to settings, and you can change all of the colors right here. So if you click on the volume right here, all of your indicators are going to pop in under this window up here. So if you click on your volume, it's going to come up on this level right here. And if you want to move it down underneath your chart, I never have this plotted over the chart, but if you want to move any indicator into its own pane under the chart, you can just click on right here, move to, and then new pane above or below. So if I click below, now it's in its own different thing, and I can sort of minimize this down here. So same thing with the MACD. If I want to add any sort of indicator, I can go up here, click on this, and then type in, for example, MACD. So boom, we click MACD. Now MACD is underneath here in its own pane as well. And now we can start to add indicators to our chart. If we want to change this so that it is dark theme, we can go over here, hit yes, and now it's going to put a dark theme on TradingView. Okay, if you want to add a watch list, okay, you can go over here, drop this menu down, create watch list. This is going to require you to sign in, obviously, but you can add all of your favorite cryptocurrencies into a watch list. We can have different colored watch lists. So if I have my blue tab over here, if I want to change this tab, I can go over to, for example, a master watch list that I have, click on this, and if I add it to green, it's going to now tab it green, and it's going to appear on my green list. And you can organize this however you want, but that's sort of a cool way to do that. Next thing that I want to talk about are the tools over here. So you can customize your own little toolbar right here by adding a star to the indicator. So if I want to go over here and star my trend line or an arrow or whatever, I can add stars to these and we'll add it to this little toolbox, so you don't have to click into each menu setting over here. The main things that you're going to use are trend lines right here. Okay, this is a Fibonacci tool. So like we were talking about before, I can click and then drag, and then I can click again, and it's going to leave Fibonacci ratios so that we can see it on the chart, and we can see which levels of the Fibonacci are actually reacting off of which levels. Okay, if we want to add text to the chart, we can click here, you can type in your text, hit OK, and now you can move this around to different levels. Okay, this is going to offer a wide array of tools. So a lot of times when we're doing Elliott wave theory, if we want to count wave structures, we can go 1, 2, 3, 4, 5, and then use the ABC tool down here. This isn't an Elliott wave, but I'm just showing you the features. Okay, just go through all of the indicators and all of these tools, and you can start playing around with things that are, helpful to you in your trading process. But this is a cool way to get started actually being able to physically chart cryptocurrencies. Okay, and a lot of times there's going to be altcoins or other coins other than, major big pairs that are listed on huge exchanges, and TradingView might not offer charting for those pairs. So there's a few other resources that you can use when it comes to charting smaller coins that may not be on major exchanges. And one of them is DEX Tools. So dextools.io will allow you to use TradingView features, but with any pair that you're looking to trade. So right now I have Block Ape Scissors pulled up, which was one of our investments that we made in our internal team. And you can see over here, I'm still doing a lot of the same charting stuff, but it's over here, and BAS is not a big enough cryptocurrency to be listed on TradingView as well. So next thing that I want to talk about is one of the most important things when it comes to actually trading and investing in cryptocurrencies, and that's called risk reward and winning percentages. So with those two metrics are how you're actually able to figure out over time with your trading if you're going to be profitable. Okay, so winning percent obviously is, if you take out of 10 trades and you write half the time, or you write 5 trades, you have a 50% win rate. Okay, risk reward ratio is going to be the ratio between the amount you're risking on a trade and the amount your desired return is. And these two metrics put together is what's going to show you whether or not you're actually profitable in your system. And understanding this is how you're about to basically crack the code of figuring out whether you're going to be profitable in your trading system. And I want to use this LPT trade as an example of risk reward and how you'd be able to figure out whether or not someone's profitable or whether or not you're going to be profitable. So if we're looking to enter at this yellow line right here, okay, that means that right at 1597, we're looking to get in, and we're looking to exit our trade at 46.90, and our stop loss, or where we're planning to exit the trade for a loss if the price is to go there, is going to be at $10.30. Okay, so this is going to give us a ratio, or a risk reward ratio, of 1 to 5.47, meaning that if we're risking $100, we're making $547 if we're right. So just to put a common misconception to rest, a lot of times people think if you're wrong half the time or you're losing trades consistently that you can't actually be a profitable trader. But essentially, let's say overall I lose 50% of my trades. So I'm wrong half the time when I'm trading. If my average risk reward per trade is 1 to 4, so I risk $100 and I make $400. If I take 10 trades and I risk $100, I make 5 of them correctly. That means I'm making 400 times 5. And that's going to give me $2,000 in profit. And if I'm losing $100 per trade times 5 trades, which is 50% of the time, I'm taking $100 times 5, and that's going to be 2,000 minus 500, which is going to leave me with a net profit of $1,500, even if I'm wrong half the time. And we can keep doing this down to more and more extreme ratios until we figure out where we're not going to be profitable. But even in the beginning, if you're starting off with trading, as long as you have good risk reward and you're able to figure out patterns that are repeatable and quantifiable, I can lose 75% of the time if I have a 1 to 4 risk reward, and I'm not going to still lose any money. So if I can make $400 and I'm only right about 2.5 times on the trades, I lose $1,000. And if I lose 7.4 trades for $100, I'm losing $750, which is $1,000, which is still going to give me a profit of $250, still being wrong 75% of the time. So it really comes down to, like I said, risk reward ratio and win percentage. And this is something that we constantly study and hone in on when we're trading these repeatable patterns and following the NevaTrade system. But I just wanted to lay that to rest, and this is going to segue nicely into trading psychology. And this is one of the most important things that I hope you really pay attention to in this sort of free training, because concepts that intuitively make sense and make people successful in real life are the exact opposite in trading, which is why 90% of people actually fail. So what you need to understand is that emotions come with not knowing. And if you statistically know over time you're going to make money with the system, i.e. risk reward, i.e. winning percentage over tested data, why on earth would you get emotional about winning or losing? If you know over 100 trades, if you do the same thing over and over, you're going to end up on top, even if you lose 4 or 5 trades right in a row. Okay, the only way you'd worry about losing trades right in a row is if you don't actually know the outcome statistically over time. Okay, so you're simply executing something that you already know the answer to through backtesting and data. Each trade that you take needs to be 1 out of 100 trades. If you trade a different pattern each day or a different system each day, which is basically what every trader tries to do, they're just like, oh, this looks like this cool pattern, or this looks like a good buy here. You don't actually know that over time you're going to be profitable because you don't know that exact system's outcome over 100 trades. Okay, and that's where people a lot of times go wrong. They try to learn a bunch of different things, and that's not actually going to lead you to success. That's just going to make your head spin. You're going to lose, and you're not going to know why, and you're not going to actually know the outcome, and that you're going to be successful over time. And there really tends to be a vicious cycle when people are beginning to learn, because usually what happens is when you're not scared, but you're actually not quantifying risk in the beginning, you'll tend to do things that most people who know the risk of trading won't do, which can oftentimes lead to great success in trading until all of a sudden you get really, really burnt. And then once you get really, really burnt, you go and seek all of the market information that you can find, thinking that, if you learn all of this information, you'll never make a mistake again and you'll never lose money, which is then reinforcing the natural inclination to look at losing money and being wrong as a bad thing. Okay, in normal life, losing money and being wrong is always bad. But in trading, losing money and being wrong is essentially opportunity cost, because the only way to expose yourself to being right, even half the time or 40% of the time, which is still leading you to profitability, is by letting yourself know that I can be completely wrong and lose money on this trade, and it's not bad. Because in order to put yourself in a position where you can eventually make money on those trades, you need to accept that those things are going to happen and not let yourself say, I can't do that again. I did something wrong because I lost money. When you have a system, there's no need to get involved emotionally because it doesn't actually make sense if you already know the overall result of the system, which will then in turn remove any sort of taxing mistakes that you can make when you're using emotion. And this will also cut out deviation from statistics that you've already proven will make you successful. A book that I highly recommend reading is Trading in the Zone by Mark Douglas. Okay, this is literally the epitome of trading psychology that will lock you in and get you in the right mind space to be able to be successful. All right, so now what I want to do is take all of the information that we've learned so far and start to apply that to actually evaluating cryptocurrencies based on their fundamentals and their technicals to figure out whether or not they're safe to get into and if we should even be focusing basically any attention on them as it is. So I want to go over here to CoinMarketCap. So keep in mind, CoinMarketCap should essentially be your Google for cryptocurrencies. And the reason I say this is because there's a lot of scams and hackers out there that are going to try to put fake websites up so you can connect to it. And basically they're phishing attacks to try to take your money. So anytime CoinMarketCap is verifying that a project is on there, anytime you're visiting the site or you're visiting anything else that you're going to be connecting to, always go through CoinMarketCap and check the actual addresses. But what I want to talk about is market cap, diluted market cap, and then circulating supply, considering we've looked at all of those things. And then I want to take a look at some price action and some things to look for in cryptocurrencies. So obviously the smaller the market cap is, the less money that is actually in that crypto, and the easier usually it is for these projects to increase in value, being that, if we have a $1 billion cryptocurrency versus a, $1 million cryptocurrency, it's pretty easy to raise $1 million and double the price, but it's not so easy to raise $1 billion. So as the market cap increases, depending on the circulating supply, the price of the crypto could increase a lot more quickly, which is why we sort of look at, micro cap and small cap cryptocurrencies for these crazy parabolic moves. Another thing that we want to take into account is fully diluted market cap. All of the funds that are held in the cryptocurrency via contracts. If you notice right here, we have $44 million and we have almost exactly half of the maximum supply of BAS actually released right now. Now, this is really important when it comes to looking at the tokenomics of a project, because you want to look at how quickly the total supply is going to turn into the circulating supply, and for what reason, because that can also dilute the price of the crypto. In order for the actual money in the crypto to stay the same, which theoretically, if you were to release all of the max supply all at once, more money wouldn't be entering the market. Instead, you just have double the supply, which would mean that the price would essentially have to drop by half. So the rate in which the total supply is released into the market is something to keep in the back of your mind when you're evaluating projects. But a lot of the times you can really look at the market cap and then look at the relative cryptos around the project that you're looking at to see where a realistic range of growth would be. So another good way to evaluate some of these projects is just take a look at some of the partnerships that they actually have. Obviously, cryptos are going to try to put the craziest partnerships, and even if they just do something very subtle with them, they're going to flex it as if, they have done all these crazy things with these projects. But just read into a little bit of the partnerships. But you can usually click on those sponsorships and see what's actually going on, in which case I did with BAS, and in members of BAS were actually panels on IBM events that they were hosting. So it just seemed really weird to me that they were at a $3 million market cap and they had a legitimate IBM partnership. So just another thing to sort of just look at their strategic partners. And then you're going to want to read the white paper of the cryptocurrency. All I'm going to look at is the white paper for the tokenomics, the audit report. Then I'm going to look at all of the holder concentration on Etherscan or BSC scan to see where the money's actually sitting. So I'm going to get into that and we're just going to walk through the steps, and then you can start to see where the distribution should be of the tokens, and you can start to compare this and understand where the holder concentration actually is when we go on to Etherscan or BSC scan. And then we can start to cross-check that with the amount of holders that we're seeing in this holders tab. So the number one thing to be careful of when you're looking at holder concentration is large wallets of the project, anything basically over 10%, not having one of these contract icons right to the left of them. That's basically going to mean that an individual wallet holds, over 10 to 15% of the total supply. in which case they can literally just go and dump it. One individual wallet is going to have so much control over what the price actually does, and the fate of the project lies in one person just deciding to buy or sell. So what we really want to see is these contract icons for the top holders, which means that that's going to be either liquidity locked or team vested tokens. These tokens are being held so that the tokenomics can unfold and all the smart contracts can release them when the time is due. So we can see our first non-contracted wallet address has 1.5% of the total tokens. So that's a very healthy holder concentration. So the next thing that we really want to look at is an audit report, just to see if there are any critical errors that were found on the audit report. So we can see right here, no security threats were identified, which is good. The one thing that was found initially was that one of the owners holds more BAS than the liquidity, which is considered an unhealthy token allocation, but they did fix that. A lot of the times you can just reach out on the Telegram too and ask about these questions and see if they have been fixed and ask for proof of that. Another thing to look for is to see if the token tax or fees can be changed, because that oftentimes can lead to either a slow rug pull or a big rug pull, which is where they start to, tax the transactions at like 99%, and it means that no one can really even sell any of the tokens. So there's a lot of sketchy stuff that can go on when the token tax can be changed or there's not locked liquidity. But as long as you have those two things, essentially, that's oftentimes a good indication that you're okay. So really what we want to look at too is to have either a Solidity audit, a Hacken audit, or a Certec audit. Okay, one of the ones that isn't so good is Tech Rate. So if you see a Tech Rate audit, definitely do some more diligent research, because multiple of those projects have actually still been rug pulled, even though they have an audit through Tech Rate. So just keep that in mind. But really majorly what you're looking for as far as evaluating a project to see if there's actually something there is, do they have a working product? What's their vesting release? So you can usually just look at the tokenomics or ask the team to drop the vesting release schedule so you can see when tokens are going to be given to, seed investors, private sale investors, or basically when there's going to be a lot of tokens given to the market that could potentially sell off. So those are usually when big price changes are going to happen. So you want to keep that in mind. When they're going to be listed on exchanges, okay, usually when altcoins list on major exchanges, there'll be a big pump and then a dump off right there, because, leading up to the exchange, usually the rumor pushes the price up earlier before they list, and then once they list, they'll usually take a dump and then sort of sit around. So you want to think about selling a little bit earlier before they're listed on exchanges, because usually, like I said, the hype will push the price up even before they're listed on the exchange, and then once they list, it's really not that crazy. Okay, so tokenomics, once again, you can go into the white paper and see how the tokens are released and distributed, and then you check the holder concentration on BSC scan or Etherscan and make sure that there are contracts locking the liquidity, and that there's not one monopolized wallet that could just completely crush the project. You want to check some partners as well. So if they have really good strategic partners and they're actually legitimate partnerships, you can start to gauge how successful the project could be based on the people that are on their team. Okay, that's a little bit more abstract, but it's definitely something to keep in mind. And then also you can ask the project about their marketing budget, because as we know, if influencers or whatever could push these projects, that usually will move the price quite a bit. So you want to know how much they're actually investing in trying to promote their project, because that's how you get exposure and that's how you get price movement. And if you can figure out when they're looking to do that, that can be an incentive to get into projects and potentially look for a catalyst for movement. All right, so let's say now we've fundamentally evaluated our crypto. Now we want to take a look at a chart. We have a few options. If it's on TradingView, which oftentimes usually only the big coins are on TradingView, we can start to evaluate projects on TradingView. Or if we need to, we can use DEX tools or we can use PooCoin, both of which are going to be okay. So let's say, for example, we wanted to look up BAS. We could type in BAS, find our pair. And you can see right here, I've actually already done some analysis on this chart, but this is going to give you TradingView access to some of these smaller altcoins that aren't listed on TradingView, but you can still chart as if it's on TradingView. So I like to do a Fibonacci retracement off of any move that I'm looking at. So, this high right here, and now we're starting to get some price action pullback. I want to go from the low to the high to start seeing if there's any levels of this Fibonacci that are still remaining important to us, because then we can start looking at where there could potentially be reversals. As we learned earlier, the 61.8 level is the full retracement level. So even with BAS right now, we're literally looking at 87 cents at the 61.8 complete retracement. As we were talking about with the trend analysis as well, we can start to see these lows along here. So we can really just draw a trend line along these lows and see that We have contact points off of this low, and then we're getting contact points off of this low. We see the breakdown and then a resistance touch off of here. So this was a pretty serious support level that is just broken down. We can also click on this line and then clone that line and see if it matches up with the price action on the top of the channel. And you can see right here, off of these two highs have matched up perfectly with this level. So this was really our upward trend that is now broken down. So essentially, either it's going to follow a lot bigger of a trend, or we have broken down some pretty serious support. And that's sort of how you want to start evaluating these cryptos on a technical level. Okay, since this is such a new project, we really don't have that much technical analysis ability because we don't have that many levels to base things off of. But you always want to sort of start off with the baseline and draw the trends that you can and look at the Fibonacci levels. Another important thing to keep in mind is something that we discuss in the premium side of the training, which is Elliott wave theory. It's basically a way of counting impulse and corrective waves to predict reversals. And oftentimes this can be a good indication as to when trends will likely exhaust and stop moving up. So we can go over to this tool right here. So if 1 is our initial wave, we get a pull down, that's wave 2. Wave 3 should be the largest wave. Wave 4 should usually come down to the crest of 1, but in this case, it was a crazy parabolic move. And then we have a move up to 5. And then if you look, 5 was the top. We really didn't get a full ABC correction. So ABC corrections usually happen after the 5th wave, where we'll get a move down to here. We'll get another high and then a low down to here. And we can actually use a Fibonacci, an inverted Fibonacci off of this B to A zone right here. And we can start to look at either the 161.8 or the 261.8 level as a level where we could potentially see this C stop and then continue moving higher. So we can start to use this to take trades on. But the interesting part, especially with BAS, is we can see if we draw our Fibonacci off of this entire thing, our 261.8 value is matching up almost perfectly with that 61.8 level, which means this should be a pretty serious level where we should see some support, as well as we have the high of 1 right here, which is usually where the C wave will then correct down to, either the low of 4 or the high of 1. So this zone is going to probably be a pretty crazy reversal zone for BAS if we are to follow it on a technical level. But here are some concepts that I look at when I'm evaluating cryptos. And the more of this that you learn, the more you can really start to position yourself in a smart way, while other people are just sort of aping into things and not really thinking about what they're doing. So just wanted to cover that. All right, so now I want to get into using exchanges and talking about how to actually function on the exchanges, which exchanges are best for what we're trying to do. And then also I want to talk about MetaMask so that you can figure out and basically be able to operate buying altcoin projects that are small and aren't on major exchanges. That's probably the number one question that we get is, how do I actually buy these coins? So I'm going to go through all of the exchanges that I use, for what reason, break that down to you, and then show you all of the features that are included with altcoins and getting into these projects, being able to take trades effectively and safely. All right, so here are the major exchanges that we use here at Trade, and then we also use MetaMask for the altcoin trading. That's sort of like the gold standard as far as getting access to, cryptos that aren't on major exchanges. So first off, Coinbase Pro is extremely good. Okay, the fees are very competitive. They don't have a ton of selection as far as altcoins are concerned, but what they do have is a very good interface, and it's obviously one of the largest, most secure exchanges that there are. So Coinbase Pro for trading is good. The only thing is that US residents cannot use it to short. So that's a downside of Coinbase. We can't use leverage. We can't short. Okay, it's sort of just a bread and butter, basically just a very legit exchange. Okay, KuCoin is the gold standard for me as far as being able to trade with leverage in the United States and have it be a pretty credible exchange. Okay, KuCoin is a pretty good exchange. So I'm going to go over all the features on that. We can use leverage. It's very good. It's very safe. It's just a good exchange overall. Kraken, I don't really use anymore. I have used it in the past, but there's really no need with KuCoin. So I'm going to leave Kraken out. Binance.us, or Binance for those of you that aren't in the US, is good. We can't short on Binance.us. Either in some places in the US or not at all, but Binance.us has pretty good selection, and it's once again, a very credible, legit exchange, and then MetaMask as well. So first, let's go over using Coinbase and talk about just the regular functions that we can use overall. So right here, once you log in, this is going to be your portfolio tab. This is just some of the holdings that I have on Coinbase. Nothing crazy. It's sort of just like an intermediate, like an escrow almost for me, where I'll have stuff in here and then I'll move it in and out of bank accounts with here, because this is connected directly to my fiat bank account. But if you want to move money into your Coinbase Pro, all you have to do is hit deposit over here, click this deposit address. So if you want to deposit USD into here, you can do a bank transfer, you can do a wire transfer. if you want to deposit, let's say for example, USDT, you could do a crypto address. So you go over here, understand, and then you just copy the address and you're going to be able to paste that from wherever you're transferring, and you can transfer it right into here. Keep in mind with Coinbase Pro or Coinbase, there's a 7-day holding period where basically if you're trying to move money to, let's say, a different exchange and you want to go first through Coinbase, if you deposit $1,000 in cash into your Coinbase to then turn into cryptocurrency to try to send, you need to let 7 days go by for the money to clear into Coinbase before you can transfer it out of Coinbase. But you can buy the crypto on Coinbase. You're just not going to be able to transfer it out. Same applies for Binance.us. Okay, for these more centralized exchanges, there's a 7-day holding period just for a security measure. If you want to trade, you can go over here and hit the trading tab. You can select up here. You can pick your pair over here. So if you want to trade against a stable coin, which is a cryptocurrency that's just basically tracking the value of whatever currency. So for this, it's USDT. So it's tracking the dollar. If I want to trade Bitcoin, I can click BTC against USDT. Bitcoin actually just had a pretty nasty red candle right here that we're seeing. So let's say, for example, I wanted to buy this dip. I could essentially go over here, hit max, since I only have $16 worth of USDT. That would be that. But if I want to set up a limit order, I could set the limit price to, let's say, 46,000 over here, and then I can place the order, and that's going to set a limit order for us. If we want to get in with market, we could just hit max. Remember what we talked about with market orders, you're just going to get right in. And that's essentially how you use Coinbase Pro to trade. It's not really that complex, actually. All right, so next I want to talk about Binance.us and just go over the features here as well. So once you're signed in, basically this is your dashboard right here. You can see all of your portfolio holdings right here. But if you want to go in or move money in and out of here, you can go over to the wallet section, and then you can go to withdraw or deposit. So once again, if you want to deposit funds in here, you click that. Currency, understood, and then you just select whether it's be EP2 or if it's a Binance Smart Chain token, or if it's going to your MetaMask wallet, it's going to be this address. You can copy the address and then you're good to go. Okay, if you want to trade, you can go over here and hit the trading tabs and go over to markets. Then you can select your pair. So if you want to trade Bitcoin against the dollar, you can go over here. And then if you sort of want to get a more advanced trading window, you can click on this advanced button right here. And then this is going to bring you to sort of a more advanced interface that you can use. So once again, no leverage for Binance.us. This is only showing us how much money we can actually use to trade. So it's going to show you right here how much we have available. Same thing with the limit price. So if we wanted to buy Bitcoin at this limit price, we could set the limit price, set the amount of Bitcoin, and then we could hit buy. And then same thing with market order, same concept as before. And if we want to do a stop limit, the same parameters are right here. So that's basically how you use Binance.us. And then lastly, I want to talk about KuCoin, because KuCoin is by far my favorite exchange overall. So basically, once you go into KuCoin and you log in over here, you can click on your assets button. And this is going to show you all of the assets that you have in your exchange. This is the main exchange that I use for my trading. So I'll bring money into here, I'll place trades, and then I'll usually pull it out. So we have our trading account and then our main account. When you send money in, you're always going to be sending money into your main account. It's super easy to transfer from your main account over to the trading account. So I can literally just go over here, hit transfer, main account, trading account. I can click my available balance and then confirm it. And it's just going to move it back and forth. There's no fees. It's obviously on the same platform. So there's that option. If you want to deposit money into here, once again, deposit tab, select your currency, copy the address. It's the same song and dance as before. Okay. So basically, if you want to execute trades, there's two major ways or main ways that I'm going to be doing it. The first is spot trading. This doesn't allow you to set up advanced order types or use leverage. So over here, you just put in your trading password, and then that window will pop open for you. The same parameters as before are going to be applicable. You have your limit order, your market, and then your stop limit or your stop market order. But this is really mostly the feature that I'm using the most. We can go up to this top banner right here and go to derivatives, and then we can go over to Futures Pro. And this is where we're going to be able to put our advanced order types in to be able to put stop losses. And this is how we take trades on the NeverTrade side of things, so sort of like the premium side, so that we can actually effectively get in. So let's say I want to buy Ethereum at $3,800, but I wanted to put a stop loss underneath this low right here at 36.85. I could literally go in here, set a limit order, set my ETH amount. Let's say I want to buy 1 ETH. I could have the option to use up to 5x leverage, which I'm going to explain to you in a second isn't actually any more risky, as long as you're just basing your risk off of your entry and your stop loss, taking the difference between that value and multiplying it by the amount of tokens that you're going into the trade with. And that's all you have to do as far as calculating risk. Leverage is not more risky It's just allowing you to take larger size positions. The risk is completely independent from using leverage. So if I'm longing right here, we have two options. We have take profit and stop loss for long positions, or take profit and stop loss for a short position. Shorting is when we want the crypto to go down, but long is when we want to make money off it going up. So if we check this box over here, we can set our take profit to say 4,200, and we can set our stop loss order to 36.85. And then if we hit buy long over here, it's going to set our stop loss at this range, our profit target at this range, and it's going to get us long here. And so basically, whenever you're calculating risk on a trade, I'm saying I want to get long on Ethereum right here. If it goes to this level, I am wrong because it broke down through this low and it's no longer following the trend. But if it hits my profit target, I want to exit the trade for a profit. Those are the only two situations that I'm taking action. So you have a full game plan and you're not trying to make decisions on the fly based on whatever your temporary emotion is telling you, because that's what causes losses. So in order to calculate your risk on this trade, we can go 38.36 minus 38.83. So roughly that's going to be about $150 difference between this value and this value. So if we're getting in with 1 Ethereum at this price and we lose $150 on that 1 Ethereum, that means that, 150 times 1 is 150. That means we're risking 150 on the trade. So whether or not I'm using 5x leverage or 1000x leverage, all you have to do is find your entry, your stop, subtract the two values, multiply by however many tokens you're trying to go into the trade with. That's your risk. That's the end of the discussion. If you want to risk off of liquidation, meaning that you're just going to let your position actually go to zero, then that's where leverage starts to be important. So same thing with shorting. So if we wanted to short Ethereum here, and let's say we put our stop loss at this value and our profit target down here, and we got long here, we would just put our take profit at 35.16. We would put our stop loss at 39.47, and then we would just hit sell short, and then we would be done executing that trade. And that's basically how you use KuCoin effectively. And this is the reason why I really love KuCoins, because it gives us that leverage option. We can put in the range orders with stops and take profits at the same time. And there's a pretty big altcoin selection on KuCoin as well. All right, so next I want to talk about MetaMask, which is basically the go-to DEX for altcoins. So all of these crazy little altcoin projects that can, 20, 30, 1000x, whatever, aren't usually listed on major exchanges, because in order to get on major exchanges, it has to be legit enough money behind it, and enough validity behind it for the exchanges to want to list. So over here is where we can get access to shitcoins, essentially. So we have a few options as far as blockchains to use, but this is going to allow you to get access to the Binance Smart Chain and then the Ethereum mainnet to be able to trade on here. So if we want to be able to switch between blockchains, I only really use BSC and Ethereum primarily. But if you want to add any other blockchains, you can see, you can go over, click on this button, go to settings, and then go down to networks. And this is going to allow you to add any sort of network. If you want to add a network, you can click over here. You're just going to have to Google all of this information and submit it. So in order to get MetaMask, all you have to do is go to MetaMask and just make sure it's the real MetaMask. Don't fall a victim of a scam. Make sure it's this exact URL, hit download, and then basically go into your Chrome attachments and then pin it to your Chrome extension. And then you can just basically use it as a little browser extension. You don't even need to use it as a regular site. I just use it basically like this. Okay, so this right here is going to be your address for your MetaMask. This is for Ethereum, this is for BSC, this is for any blockchain. This is just MetaMask address. So anytime you're trying to deposit funds from another exchange, just make sure it's either BEP20 or ERC20. If you send it to the wrong blockchain, the tokens are going to be gone. Then essentially the main way that I operate MetaMask is by using BNB tokens to be able to swap into whatever other token that I'm trying to buy. So let's say, for example, we pull up, a random token. So let's just go to Gaming Shiba, for example. Just random. Okay, we go over here. Here's our BEP20 address. So we can go over here and copy this. Then we open up our MetaMask, we go over here, we go down to the bottom and hit import tokens. Okay, custom token, this is how you add tokens. So you go over here, Gaming Shiba comes in, hit add token, import token, boom. So now over here you have Gaming Shiba added to your MetaMask. And don't be afraid, by the way, if when you log off MetaMask, it's not showing the tokens. It doesn't mean that the tokens are gone, it just means that MetaMask forgot the tokens. All you have to do is re-add them. And if you ever get confused as to which tokens you're actually holding, you can go over here and you can just go to BSC and you can just type in your own address, and then you can actually drop this menu down here and see exactly all of the tokens that you're holding. That way, if you, for example, MetaMask forgets which tokens or unadds the tokens, you can essentially just go back in there and re-add all the ones that you have holdings under. So now, for example, let's say I want to buy Gaming Shiba. I can go click in here, hit swap, and then basically this is the reason why you want to have probably some BNB or basically any other token, but I like to have BNB because the fees are really good. You go from swapping from BNB, and then you go over to, add your token, Gaming Shiba right here. Okay, since we got it off CoinMarketCap, we know it is the token. It doesn't mean it's legit, but it is the token that we were looking for. So we can hit continue. Slippage tolerance is basically the liquidity issue that we were talking about before. So if there's not enough people to get you in, you can increase the amount of slippage tolerance, which means you're allowing the essentially market order to pick up lower and lower orders, which obviously is going to give you a worse average price, but it's going to allow you to get in on tokens that don't have very good liquidity. So oftentimes you're not going to be able to get in at 3%. So I like to just go to 10. They're going to say it's very high, but it is what it is. 10 BNB right here and swap it into here. I can go ahead, hit confirm swap. It's going to fetch. Sometimes it takes a few times for it to go through. This is also a fairly big order for this token, I'm assuming. No quotes are available. We can also try increasing the slippage tolerance. Okay, so sometimes you're not going to be able to get any sort of quotes on here, which is fine. So what we have to do, or not have to do, but what you have another option for BSC tokens is using something called Pancake Swap. So don't Google Pancake Swap. It's going to be a scam. You're going to get hacked by connecting your wallet and giving your seed phrase away accidentally. Always use CoinMarketCap when you're searching up any sort of exchange or site that you're hooking your wallet up to. Okay, so if I go to Pancake Swap over here, I can click on Pancake Swap. This is going to take me to the real site. And just to show you why I'm talking about, if I just go Pancake Swap on Google and Google that, okay, we can click on this and see already the URL is different. So we have pancakeswapes.red. Okay, this looks exactly like this, right? So this is the real Pancake Swap, pancakeswap.finance, and here is pancakeswapes.red. So watch, if you click connect your wallet, it's going to pull up a MetaMask extension, which is not, it's just you're literally submitting your information to the hackers that set this website up. If you put your seed phrase in there to hit connect, your MetaMask wallet is gone. I really hope you made it to this point in the video because this is like one of the most important things to remember. I know people that have lost ungodly amounts of money, and I actually almost accidentally did this myself the other day. You always have to just double check. Don't be fast. Don't be rushing to do anything. Don't do stupid stuff. Whenever you're giving your seed phrase away, check a million times that you're not putting it somewhere illegitimate. Always go through CoinMarketCap. But this is literally a fake website. So never just Google Pancake Swap. But basically, Pancake Swap sometimes has better liquidity for some of these altcoins. So you just connect your wallet over here, and then you just go over to trade, hit exchange. See how it says 10 BNB because it's connected to our MetaMask. So we can hit max over here. We can go to this over here, hit manage tokens, and we can go in tokens, and we can go put a custom token in. Type that in. It's going to pop up the address right here. Then we just hit import. Okay, it's going to warn you. Of course, we already viewed it on BSC, so we know we're good. Boom. And now we've added Gaming Shiba over here. Sometimes this liquidity can be better. We can go over to this gear right here. You have your black and white theme. That obviously doesn't matter. This is giving you also your slippage tolerance. It's down to 5. Exit that out and then hit swap. Confirm swap. Insufficient output. If you get that error, it means your slippage tolerance isn't high enough. Okay, I'm confirming the swap again. Now it's going to confirm considering it's pulling my MetaMask up over here. New address detected. We can hit confirm. Okay, so now for the sake of the video, I just put 1 BNB into this token. But yeah, so that's basically a run through of how to use MetaMask and basically, yeah, just like the best practices for using MetaMask. So when you have your recovery seed phrase, never give that to anybody. And when you're, like I said, when you're inputting it, it should never ask you for your seed phrase when you're connecting to some sort of website. So if I'm connecting to Pancake Swap, it's not going to ask me to put my seed phrase in for MetaMask. Okay, the only time you're going to be asked to do that with MetaMask is when you're signing in on a new device, which is the whole point of the recovery phrase. So if someone steals your password, that's going to register, a different IP address, a different computer, and that's why it's asking you for that seed phrase. So if you're on your own computer and it's asking for it, double check all the links, make sure you're actually in the right place, and just never share that password with anyone. So I just want to make this video going through all of the trading concepts that I thought were sort of really confusing with crypto when I first got started. And I just wanted to add some clarity on all of the things that I think are critical to get started in this game. There is so much to learn, and we do have an entire training course where we go through all the concepts in way more detail. We actually teach the trading system, talk about balancing a portfolio. Okay, we have a whole Discord community where we're talking about the early investments that we're getting into. We have a trading team, we have mentor sessions. So if you want to get more involved in all these concepts and learn on a way deeper level how to actually execute all of the concepts that you've just learned here, we do have that in the description, and we have almost 1,000 members on that team already. Okay, you can check out our Trustpilot reviews. People absolutely love it. Okay, we really are a bit different here because we're pretty genuine in the way that we do things, and our team absolutely loves what we've done. It's actually crazy value for what it costs. So if you're interested in taking that next step, there's tons of links and resources on all of that stuff in the description. But that basically does it for today, guys. If you have any questions or comments about this video, put them in the description. Don't forget to like the video, subscribe to the channel if you are new here. And if you made it all the way to this point, congratulations for having the dedication to, be able to invest in yourself to learn all these concepts. So I hope we can take you to that next level and potentially have you on our official Inevitrade team. But anyways, guys, until next time, I will see you all in the next video.